Good morning. Welcome to the trade setup. I'm Niyat Shah, and let's get started with the key cues. Remember, the cues aren't the most positive, so keep that at the back of your mind. No, can we actually start with the U.S. market update and the other updates? Then we'll get to the what to watch out for piece. So this is what they did in Friday's session, and the Nasdaq came off. Much as people are liking the fact that there's a bit of a roll up in IT in the last few days because Nasdaq had stopped correcting, I think it kind of gave way 2.5%. Not saying this is how the trend will be throughout this week as well, but it's a slightly difficult macro week, and I'll come to that in a moment. Some other cues, which include what Brent crude is doing, and it's stable at about 120, 121. Remember, this is the big thing because Saudi has raised the prices in Asia, and I'll come to that in a moment. CBOE VIX flattish, Bitcoin about 30 odd thousand. The reason why we bring Bitcoin every single day because it could well be a barometer of the risk on versus the risk off as well. So pretty interesting what's happening there too in the crypto space, but that's for another day. For today's session, I think from amongst everything else, the US market cues and Brent crude are the key aspects to watch out for. Now, what's to be watched out for this week, considering it's a fairly important week as well? That the US CPI data on Friday, which will show probably a continued trend of peaking inflation. The markets will be hoping that it shows that trend, but who knows? Then the ECB meeting on Thursday, it could be a prequel to stiff rate hikes in July. And the MPC meet and commentary will probably show the extent of hawkishness of the Reserve Bank of India, which is coming out about on Wednesday. So very important macro week in more ways than one, and which is something that the market will be could be very off. The SGX Nifty, needless to say, shows a downtake at about 0.5% or thereabouts is where it is currently positioned at on the downside. So we'll have a start which is marginally soft, but still above the key support area of 16,400, 16,500. And until a better part of last week, and let's get the advanced decline for last week as well, just to get a sense of what happened. For the first time in 7 days, we had a fairly strong reversal in the market breadth, and a bunch of stocks. Cement, of course, took it on the chin, and you saw really what happened. But a lot of high flying stocks, Fine Organics has had such a strong run up that continued, that fell. Heikel continues to fall, Dixon continues to fall. So it was a session wherein some of the industrials and specialty chemicals did come under a bit of stick, to be very honest. Now, since the setup is not looking all that great, let's get the trade setup going. Uh, this is what could happen, right? The week gone was a positive one because the closing levels, despite the correction, still finished above the opening levels and with a sizable gap in between. So therefore, the in technical parlance, the week gone was a very positive one. But there are macro headwinds ahead, like I said in the what to watch this week, and therefore that could put a lid on the optimism in the very near term. I still believe that. Both leverage longs and leverage shorts are not a picture. Even leverage shorts might not be a great idea currently uh, because I don't think we are in a bit of a greed zone as yet. But let's wait and watch. The reopening trade in China could actually bring a lot of money in the Chinese stocks, but could it translate into EM related flows? I think that's a very tricky thing to predict. Likely not, but just keep in mind China might actually find favor versus all the other EMs as well, and that could be the other factor to monitor from a slightly global perspective. And in today's session, oil upstream may be very active because oil has rallied above 120 a barrel after Saudi Arabia has raised prices for crude in Asia. They seem fairly confident of higher crude prices, and that might work in favor for the Reliances, for the ONGCs, Oil Indias, etc. And I think oil marketing companies also remain in focus here since we're talking about oil, simply because the refining business currently might be fairly profitable, right? Singapore GRMs are trading at about $25 per barrel, which is a new life high. And for the whole of Q1, if the GRMs have averaged maybe 24, 23, 22, whatever they have averaged, uh, that means that the profitability for all the companies in this business, particularly the OMCs, would be fairly strong. So I think watch out for oil and gas as a pack today. ONGC, Oil India, Reliance, as well as the oil marketing companies, the Chennai Petros of the world, all of them could be in focus. That's a sector to watch today. What about stocks to watch individually? Unfortunately, it's not a very strong, long list, but Let me try and take you through some newsmakers and some trading recommendations. So NMDC, they've cut prices on fines and lumps by about 1100 rupees per ton each, which is the second time in the past fortnight. So twice in 2 days, NMDC has cut prices. They've also started the process for the demerger of the steel unit, but more importantly, the cut in prices is something that the street might want to latch onto in the session today, and which is the market is not looking all that great. Watch out for NMDC in the session. Some small stocks in focus which have some positive news include a Man Infra and a Poonawalla FinCorp for different reasons. Of course, Man Infra is in a packed develop of Florida luxury condominium, and Poonawalla FinCorp, SEBI's revoked orders against Poonawalla FinCorp's MD Abhay Bhutada. I think the earlier belief was that, oh, did he give out some price sensitive information without it being public knowledge? I think that has been revoked. That could be over well sentimentally. Jeffries has come out with a note on Infosys. They are maintaining a buy, but the target price has been cut to 1830 from 2050. It's a fairly sharp cut, right? Nearly 10% odd, if I'm not wrong, or slightly more than that. They're saying that the stock has fallen 22% from the peak due to margin pressures and concerns over macro and rising yields, but the stock may be well positioned to deliver revenue and EPS over FY 23-25. Remember, viewers, in some parlance, I mean, markets at over the slightly medium term will follow earnings. De-rating is something that people should be monitoring. I think in IT case, some bit of that might have happened already. Jeffries is saying that the reappointment of CEO for another 5 years provides confidence in execution, but the sharp derating on lower growth is a key risk. So Jeffries continues to believe that in Infosys case, the derating might be a key risk. Remember, the dichotomy, viewers, of a Infosys and a TCS versus some of the others in the ultra large cap pack is that Infosys and TCS have fairly high valuation multiples in the rally that had ensued until 2021. The others did not really go up as much. So, I mean, if you look at FY 24 earnings, probably if earnings don't get derated or cut too much, then and HCL Tech probably trades at 15 times. I think Wipro trades even lower, if I'm not wrong, or just around those levels. So those are not very expensive stocks, just that they haven't had growth, and naturally, therefore, they deserve the multiple that they are at. Versus Infosys and TCS went up quite remarkably, and therefore, I think the Jeffries view on the sharp derating probability. ICICI Securities has given some positional futures recommendations. So on Larsen and Toubro, they are largely bullish. They haven't given a target price here, but they are saying that they expect L&T to do well in the capital goods segment for the June series at large. So that's interesting, and the reasons thereof, because there's hardly any change in the futures OI, but some unwinding in the ATM call strike scene has been seen there, and they've seen healthy delivery based buying from lower levels in L&T. On the flip side, on RT Industries, I reckon that they have a call which is not too positive. They're saying that chemical stocks have failed to attract any meaningful recovery in the current rally, and yes, that is obvious. We have all seen that, and they are saying that the the stock RT has been witnessing continuous short build-up as open interest has almost doubled since the start of the April series. They believe that the stock is likely to violate its May series lows and can move below the 700 rupees levels. So do watch out for RT as well in the session. Some other analyst actions are on Jindal Saw and Welspun Corp, wherein Philips Securities has rated new buy into both of those with the target price of 130 and 285 rupees respectively. Viewers, just one quick thing. There's a pretty good note. I don't have it right now on the screen for you, but Neelkan Mishra of Credit Suisse is saying that, amongst other things, that EPS cuts, now let's take the plate off. He's saying that the EPS cuts are the gravest risk to the market because he's comparing the current situation to what's happened in the past. And he's saying that in the past US recessions uh, and other factors, there was a substantial cut in market drawdowns and an EPS delivery and P multiples, all of that. So APAC EPS, he's saying, fell about 20 to 45% in the past US recessions. I don't think we've had those cuts right now. So therefore, post quarter one earnings or around quarter one earnings, once market analysts estimate what the earnings could be in Q1, if EPS cuts come about, that could pose a big challenge for markets. And of course, Nilkar is saying that to him or to Credit Suisse view, information technology and material sectors are the biggest places which have a risk of an earnings downgrade. So keep that at the back of your mind, and of course, keep health at the back of your mind, viewers, because India has reported the biggest jump in COVID cases in 3 months. Maharashtra Health Ministry said that wearing mask is not mandatory but advised. I must tell you, and I'm sure all of you probably have experienced the same thing in people in and around us, friends, family, near and dear ones. You're now starting to hear of people getting contracted with COVID. It's not life threatening, I agree, but it pays to be safe. Who wants to spend 10 days in quarantine, right? So just be mindful of that. I mean, no one knows what's the right way to avoid it, but maybe wearing a mask might help. So stay safe is all I can urge everybody around. Thanks so much for tuning in today to the Trade Setup.